Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager with GDM. Today's outlook, we start with a brand new trading week that ushered in another mixed trading session for Asia, as of course investors' confidence wavered following data that showed further declines in China's house price index. The mainland house price index fell 6.1% in April from the year-ago period, unchanged from March. Meanwhile, machinery orders in Japan rose 2.6% on a year in March, rebounding from a 0.4% slip in February. Month-on-month basis, core orders, which are usually regarded as an indicator of capital spending in the upcoming 6 to 9 months, grew 2.9%, better than the 1.8% forecast earlier. Japan's Nikkei 225 index closed at a near 3-week peak, buoyed by better than expected data as well as robust gains in the financial and insurance sectors. We're looking also at the Australia's S&P 200 index, widened its losses to finish at a near 1-week low, stung by hefty losses in the banking sector as well as 7.3% slump in BHP Billiton. European shares are set for a higher open on Monday, with investors looking to buy risk assets after a bought-out selling at the end of last week. The FTSE is called to open higher by 12 points at 69.72. The German DAX is seen up by 13 points at 11.459. And the French CAC is seen higher by 13 points at 50.04. Investors could look to pick up some bargains on Monday after Friday's sell-off after the University of Michigan's U.S. consumer sentiment report came in lower than expected. The euro brushed aside weaker than expected German growth numbers on Wednesday, drawing support from a narrowing yield gap between bonds and of course U.S. treasuries that rise against the dollar. The euro was up broadly, rising 0.4% to 1.1260. We're looking at the commodity sector now. Gold was trading close to a 3-month high on Monday, buoyed by a weaker dollar and a more soft U.S. data that triggered hopes that the Federal Reserve would not hike interest rates soon. The metal has been supported in the recent days by sluggish U.S. economic data. Much has hurt the dollar and altered expectations regarding the Fed's monetary policy. In addition to that, constructive technicals that there seems to be a no change in weaker dollar. This, of course, in turn, could continue to provide an element of support to commodities in general and gold in particular. Investors are now awaiting minutes of the Fed's April policy meeting due on Wednesday this week for clues on the central bank's opinion and the economy, and also when it could raise rates. Also, we're looking at the energy sector right now. Oil prices edged up on Monday following fighting in Iraq and Yemen, but Iranian comments that OPEC was unlikely to cut output as well as signs of strengthening U.S. production capped early gains. Prices were also supported by concerns that conflict in Iraq and Yemen could disrupt supplies after Islamic State militia said they had taken control and, of course, of the city of Ramadi. In a big blow to the government, despite these Middle East conflicts, oil markets remain oversupplied, and that the glut could, of course, worsen in U.S. production, picked up, and, of course, output by producers, club OPEC, remained strong. Expected selling interest in the areas of $65 and $67 a barrel might cap WTI crude oil and look for a move lower in range over the upcoming weeks. Downside targets for WTI is seen around the 55, 54 area. That's all for today. Thanks a lot for being with us. See you next time. Bye-bye.